This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guests today are Milana and Mateusz. Milana and Mateusz are co-founders of Kira, which is a financial hub connecting various decentralized Web3 applications. Welcome to the show, Milana and Mateusz.
Thank you, Andy. Great to be here.
Thank you as well. Really great to be here.
Well, to begin with, guys, it'd be great to get a little bit of an introduction from each of you. So let's just take it in turns. We'll start with you, Milana. Could you please just quickly introduce yourself? Love to hear a little bit about where you're from and your background and how you got into crypto.
Yes, definitely. So my name is Milana Valmont. I was born in Moscow, Russia, and I moved to US when I was 14. My background is in corporate finance. I graduated from Fordham University with a degree in economics and psychology, and I worked in corporate finance in New York after that, first as a private equity analyst, then as an investor relations manager. So I got into the crypto space first as an investor in early 2017. I got really involved in the community, and later the same year, I joined Binance Exchange as a community volunteer. And afterwards, I worked as a project manager for Altcoin and was also an advisor for Sentinel DVPN protocol. And in 2018, I was in Israel. I joined Nox platform as a head of strategy. And by mid-2019, I dedicated my full attention to Kira as a CEO.
Nice, thank you, Milana. And I just have to ask, so that's quite interesting. So you said you were born in Russia, and I know before we started recording, you said you're in Moscow at the moment. So how old were you when you moved to the US, and was that with your family? What was the reason?
I was 14 when I moved to US. So basically my mother moved to US when I was 6, and I stayed in Moscow with my grandparents. And when I was 14, my mother thought that was the time for me to reunite with her and, go to high school in Los Angeles. So that was an interesting part of my life.
I'm sure.
Yeah, but I've always wanted to live in New York, and then when the time was right for me to attend university, so that's what I did, and it was a great experience. And basically from 2017, my schedule completely changed because I started working for various blockchain companies. So I didn't have to be physically in the office anymore. So I decided to leave New York, leave US actually, and I lived in Europe, in Rome, Paris, Switzerland, and I traveled for a couple of years. And then like a few years ago, since the pandemic started, I just decided to stay here for the majority of time. So that's basically the story why I'm here now.
Understood.
Again.
Back to Moscow. All right, and Mateusz, let's hear from you. Love to hear your background.
So I'm Matt. I was born in Poland. I am an electronic engineer. After I graduated, I moved to Prague, Czech Republic. My passion was always software development. And I worked as an R&D for Barclays Bank. After that, I started working for one of the startups in the US, which was doing different dApps on Ethereum and different aggregators, DEX aggregators, hosting nodes. After that, I moved to Switzerland. I worked as project manager for the pt.com. And shortly after, we met with Milana during the DevCon 4, and we started working on Kira project.
Right. Yeah. Let's learn about the origin story of Kira then. So, did you guys meet at DEF CON 4? Is that what you just said?
That's when we met in person, but we've known each other for a couple of years prior to that because we were both in the same crypto Slack together for a couple of years. So that was a fun experience, and we were both interested in the interchain ecosystem. And yeah, when there was a conference in Prague, I think it was 2018, then we started talking about how we can make the ecosystem better. And we were also both advisors for Sentinel, and we helped them transition from Ethereum chain into Cosmos, basically. So we shared the vision that there's not going to be a single master chain network that scales infinitely and provides all the features you might imagine. And it was like more rational to think that in the long term, we'll have thousands of projects and interconnecting together. Just like right now, we see in the real world, thousands of small companies on the internet offering their services. So that basically, this vision, brought us together to start, planting seeds for Kira.
Right. So that's quite a good way into Kira then, Milana. So you said that you share the vision of a future where I suppose there are multiple different blockchain ecosystems, just as at the moment there are multiple different companies in any sector, really. So, well, let's have I'd like to understand the kind of the high level vision and summary of what Kira is then. Like I said at the start of the show, and I got this from your website, Kira is a financial hub connecting decentralized Web3 applications. So yeah, what does that mean?
So we are layer one network that connects decentralized applications together. So you can treat it as an ecosystem that enables users to deposit and stake any digital assets. So it can be any cryptocurrency, NFT, or real world assets in a digitalized form. So users can stake these assets while earning block and fee rewards, and they can retain custody of their assets at all time while maintaining full liquidity. So we are offering a one-to-one derivatives that are fully transferable. So derivatives are of those assets. So for example, if you're staking Bitcoin, you will get a derivative of that Bitcoin that has one-to-one value. And as a decentralized network, Kira enables developers to build and deploy decentralized application on our blockchain. So we are working on our own consensus mechanism, which we call multi-bonded proof of stake. And not only that ensures security of the network by the multiple bonded assets, but it also empowers network participants and validators, and not just only select high value decentralized applications that become part of crypto Kira ecosystem, thus creating unparalleled DeFi user experience.
So you could understand it as like almost as a financial hub between these different networks. So for example, like Binance Smart Chain, Cosmos, Ethereum, Polkadot, all the other, all the big smart contract platforms of the moment, right?
Yes, pretty much. We are starting with a relay chain, you can call it, or a hub, or in the Ethereum terminology now, that would be a settlement layer. And on top of that settlement layer, you will be able to deploy dApps.
Very nice. And are you guys? What is the status of Kira at the moment? Like, is it a test net? Are you working towards mainnet? Have you deployed to mainnet?
So now we are finishing the testnet. So we are completing the largest testnet in Tendermint. We have over 600 validators, and we are preparing for the first stage of our mainnet. And Matt can give more details regarding that.
Yeah, so as far as the blockchain application goes, we'll be launching in kind of similar fashion to how Polkadot was launching their blockchain. So there will be multiple different phases. We are starting with a governance module and an upgrade module with a proof of authority system. And after the mainnet launch, we'll enable the multi-bonded proof of stake, and we transition to a fully decentralized model. And from there, once we complete the layer one, we'll start working on enabling people to deploy their own applications.
Yeah, very nice. And so if you guys are acting as like almost like a kind of a settlement layer for these different smart contract based chains, and I suppose, you know, most of these other chains will have a proof of stake consensus model. How do you guys think about security and for proof of stake in the context of this kind of cross-chain world?
So you are probably familiar with, if we start from like core beginning, like we have to define what security means in proof of stake. It's not easy.
Sure.
It's not easy to quantify it. In Bitcoin, we know what security means, right? The more hash rate you have, the more security you have. It's very simple. It's quantifiable. You can even calculate how much electrical energy that will be burning, how much that might cost you, right? If you are mining a fork that is smaller than the main chain, then you are losing money, right? So this is how the proof of work scales its security. It has this property. In proof of stake, we don't have something like that. No one is officially telling you, okay, like security of proof of stake is this particular thing. So we wanted to start with this definition and make it very clear and quantifiable. What does it mean for the proof of stake to be secure, so that if you are using some dApp, you can quantifiably measure whether or not you should deposit your money there. Is it safe or is it not safe? And as far as we are concerned, like other people might have different opinions on this subject, but in our opinion, the security of the proof of stake is a value at stake, vouching for the honest operation of non-civil validators. So what if we disassemble this sentence? It means that the more money there is at stake that can potentially be slashed, that is distributed among as many people as you can, the more people there are in the network securing it, who are unique individuals, the more secure the network is. It's just like in Bitcoin. If you have more miners, right, they are more better distributed around the world, and you have more hashing power. It's more expensive to execute the double spend attack, the more secure the chain is. And the same here. The more validators you have who are individual, it's not like just China mining Bitcoin, right? No one else, right? The more unique individuals you have and the more value at stake, the more secure your proof of stake is. And in this context of Web3, we have a problem with that, because the proof of stake so far didn't have this property of having ability to scale its security. Because maybe you can scale the number of validators, but you cannot scale the value at stake. The value at stake is basically capped at the value of your token. And your token is most likely very volatile asset because it's crypto. So what we came up with is that you can stake literally any asset. And By doing so, we gained this ability to scale what was never before possible to be scaled in proof of stake. We suddenly have ability to add more value at stake, add more trust to the network. And the best example of this would be, imagine that there is some new DEX, right? Like maybe Osmosis on Cosmos or something else new popping up on proof of stake in Polkadot ecosystem or maybe Cosmos ecosystem. And you'd want to deposit, let's say $1 million to that DEX, to some liquidity pool. There is a question like, is it secure, right, to deposit your $1 million if there is only, let's say, $500,000 at stake? What would that mean? What would that mean if, for example, you have $1 billion in Bitcoin and you're depositing it to the proof of stake chain that has $100 million at stake? Your proof of stake, there's no longer it's no longer proof of stake blockchain. It stops being proof of stake because suddenly your validators have incentives to fork the chain and steal all the money that is deposited, upgrade the state machine to deposit everything to their own wallets and just exit. So what we came up with is that if we are really to exist in the ecosystem where you have hundreds different dApps, then number one, you need to have this quantifiable measure of having ability to know whether or not this chain is secure. And also you need to have this ability to increase the security if needed. You need to have the means to achieve it.
Thank you, Mats. And Milana, let's bring you back in. So is there a certain segment of the market that you guys are targeting or pitching or aiming to serve? Like, with DeFi is still, there's a little bit of a learning curve for people to engage with DeFi. So you're looking to serve existing DeFi people or kind of broaden the market to try and bring new people in as well?
So basically, yes, the goal right now is to serve current people who are interested in staking their assets. Someone who's interested in staking their NFTs, their USDT, Ethereum, Bitcoin, so they can stake all of their assets on Kira. But in the future, as DeFi progresses and in general, like blockchain expands in even more mainstream, like we want to bring people who are not particularly in crypto already, but someone who has assets already. For example, they have some kind of a real estate or an art object. So the person who doesn't want to just sit on their assets, valuable assets like that, but they actually want to stake them. So for example, you have a building in Dubai and you go to a digital issuance company, and then the company signs an agreement and moves an ownership of an asset into a form of a token where any accredited investor, because now we're dealing with real world assets, so any accredible investor who holds such an asset will be automatically the owner of the underlying building. And this building can be represented as a fungible asset, which means an asset can be divided between many people, or it can also be non-fungible, which cannot be divided. So NFTs on Kira will work in the same way. They can be refungible, which means an owner can split them into the shares so that people can trade them, they can lend them, play with them if it's like a gaming asset, and the owner of the refungible asset can have the ability to buy back the asset. So basically that will allow to bring not just people who are interested in using crypto already and DeFi especially, but people who are have valuable assets that they want to utilize with us.
Very interesting. And how do you guys see the ecosystem at the moment? So let's love to hear from both of you. Keep going with you, Milana, for the moment, but love to just get some general thoughts on some of the, I suppose, the trends at the moment. I'm thinking, Web3, NFTs, metaverse, but also, of course, how DeFi fits into all of this. Yeah.
So I think regarding the DeFi market, there are, some pitfalls. So for example, I think the main problem with decentralized applications right now is the lack of trust and quality. Like Matt touched upon, like deep decentralized apps, they're running on the proof of stakes, and they're often secured by a small validator set or a single governance token that creates a huge security threat. Anyone can launch their code, and very rarely any of this is vetted by any third parties. So all this creates potential issues not only for the end user, but also for the network operators themselves that might find themselves in the jurisdiction that might suddenly prohibit operations of certain applications, such as decentralized exchanges without KYCs and so on. So I think we're definitely looking at the market, especially DeFi, to be more regulated, and it doesn't, mean something negative, because I know that a lot of people in the community, when they hear the word regulated, they think, oh my God, the party is over now. We're not going to be able to make the same rewards as we did. But I think it actually can become very beneficial, especially bringing more people in who want to be validators, so make sure that these actors don't face any problem with potential legal issues, and especially when it comes to security for both validators and the users as well. So I think we're going to be seeing a lot of this movement in the future, where projects either have to face the reality of these issues and fix them and thrive, or they will become oblivion, basically. And I think from the point of view of NFTs, of course, there's a lot of hype around NFTs. I don't think NFTs are going anywhere, because people like to own stuff. They like to, show off regarding stuff. And there's a lot of that in real life as well. When it comes to overvalued, like fashion items, for example, and art. So I think like the psychology of people who consume these items, it's not going anywhere, and it's going to just transition into the NFTs, and then eventually transition into the metaverse as well.
Yes, thank you, Milana, and Matt. Love to hear your thoughts.
Yeah, so I think that crypto is still consolidating what direction is going to take. Like right now, we are mostly using layer ones. All the NFT things are happening on layer ones. The transactions are very high. We don't really have anything that seriously scales. Funny enough, the only blockchain that scales currently is Bitcoin, something that I don't think anyone would expect to scale before Ethereum or any other chain, because when it comes to Lightning, we actually have the instant finality there, almost near instant finality. To have the settlement, of course, it takes like an hour or so, but we arrived with Bitcoin finally being usable, despite all the NFT hype. Like, this is, I think, one of the biggest progresses that we have seen so far. And when it comes to dApps, DeFi, and proof of stake, we are seeing mostly proof of stake apps, because for proof of stake, to have any financial application, you really require eventual finality or near instant finality. It's very difficult to have any type of financial apps, smart contracts, without having instant finality, or near instant finality. So we still need to see layer twos which are usable. We don't have that yet. I think that in the future, as the proof of stake grows even more, we will also see some regulations coming in regards to people who run proof of stake applications. It is easy to identify them. They are mostly public people. So for that reason, I think once the regulators catch up, we will also see some changes to that respect. And that's also one of the things we are designing for the future, so that if you have some app running on the layer one that you are securing, you might have a choice to run it or not run it, depending on whether or not that might be legal for you to do, or that might require from you to have, let's say, an exchange license or money transmitter license if you are in the US, or maybe if you are in some other jurisdiction, you don't have to comply at all with any legal requirements. But at least this is what I see in the future. And I think a lot of things will change once we see what is still there waiting for us.
And you guys are obviously very deep into DeFi ecosystem, different smart contract platforms. How do you guys think about Ethereum versus all of these other chains? If, like, last year we saw, Solana and Avalanche and so on really make a lot of ground against Ethereum, but of course, Ethereum still has an incredible developer community and just incredible support. Huge amount of interest in Ethereum-based DeFi and NFTs. Comes with some costs in terms of gas issues. How do you see this playing out this year?
I think it is what Ethereum has is a first mover advantage.
Yeah.
Just like a Bitcoin has a first mover advantage. It is not going anywhere. There is not going to come in a chain and suddenly take its spot, regardless whether or not it's promising you 1 million transactions per second and more. Because we all already know that there exists a scalability trilemma. You cannot have incredible speed, and you cannot have all the nodes in your network knowing about all the billions of transactions that are happening at the same time, simply because of limitations in physics, how fast we can push the data to electric cables. For that reason, any sort of innovations I would still expect to happen on Ethereum for the short term. And for the long term, we still have to see how will the real world react to crypto gaining popularity. Because if we do see any sort of regulation, there is a question: will the existing chain will be able to adapt to what actual regulators and people that allow for the access for normal people to those platforms? What will be the requirements that they will see for those platforms to exist? Just as we have seen before, many DEXs, many even developers were being chased for not implementing KYC and other similar requirements. So at least that's how I see it right now.
Milana, any thoughts from you as we start to finish off? What do you think happens?
I agree with what Matt said, and I think like the issue is with validators being forced to verify the transactions without making sure that it's appropriate for their jurisdictions. And I think we need to make sure that these chains are uh, properly managed in the legal matter. And some of them face the issue of centralization, which can also become a security threat. Aside from other security threats that we discussed today. So I'm curious to see how they will be dealing with it. But my outlook is pretty positive on Ethereum.
Awesome. So is mine. Let's start to finish off, guys. So just as we finish off, yeah, I mean, we'll hear from both of you again. Just please feel free to speak to, what is next on the roadmap for the Kira network. When you deploy mainnet, how people can get involved, why they should get involved, all of that good stuff. Go for gold.
You can definitely get involved already. You can go to testnet.kira.network or testers.kira.network. One is a Telegram, another one is the repository. You can start running your own Kira node already. We have few community events coming up. One of them is NFT related. I don't know if I can say anything more, Milana, but that's what we have planned for short term. And right after that, we will have games which will help us select the final batch of the validators, which will be securing the relay chain. It is required to be a testnet, to be tester, to be PR part of the community, to be eligible for the stipends when the chain launches. We will have UBI, the Universal Basic Income, for each of the validators when they run on the Midas chain. So you have to join the testers channel. Once you do, you'll be able to run your node and have a chance during the games to take a part in the launch.
Yeah,
Awesome.
So people can still join the validator set. The testnet set and be a validator. So there's still time for that before the game starts.
Excellent. And what else is on the roadmap for this year? Milana, anything else you can tell us?
Yeah, so basically, like Matt touched upon, like we're planning to do the staking NFTs airdrop. So basically, it's a very inclusive event, so anyone can participate. So people will perform a couple of actions, and they will be able to win our custom NFTs, which will be in 3 tiers: common, uncommon, and rare. And then they can stake those NFTs and earn our token CAX. So that's the nearest event, and after that we'll have the incentives games for validators. That's more exclusive to the people who participated in the testnet, and both of these events will lead to the mainnet event. So this is for the next closest timeline that we have, and after that we'll be working on our native consensus multi-bonded proof of stake, so that it will be possible to stake any asset on Kira. So that's basically the short-term gist of it, but stay tuned for for more things coming out in the future.
Awesome. We certainly will. And listeners, if you want to dig into what these guys are building at Kira Network, the website is just Kira, KIRA.network, and you'll find everything you need there. Thank you very much for coming on the show, Milana and Mats. All the best, and can't wait to see what you guys pull off.
Yeah, thank you, Andy, for having us. It's been really great.
Thank you. It was a pleasure.